Hello traders and welcome to another video review. Today is Wednesday, the 5th of May 2021. Let's take a look at the Forex calendar. During the night we got the speeches from the Reserve Bank of New Zealand, Governor Adrian Orr. And as you can see, there was another speech at 10 past 2, so we will definitely take a look into the New Zealand dollar today to see if the governor's words changed anything. We got some data from Australia in the meantime as well, PMI manufacturing and household spending. As you can see, they are both rather in line with the expectations, and that was it about online news and data released. During the London session today, we got data from Eurozone mostly. We got the PMI services, PMI composite from the Spain, Italy, France, Germany, and the whole Eurozone. As you can see, they are being scheduled for release before 9 o'clock. We got the European Commission economic forecast scheduled for release 10 o'clock. That might be kind of interesting, and that's everything for today. What else? We got during the New York session ADP Non-Fram Employment Change, and we got all the data in form of course, services PMI, composite PMI, but we got ISM services PMI index scheduled for release 3 o'clock. We got crude oil inventories 3:30, and we got two speeches. First, 2:30 from the FOMC member Charles Evans, and then at 8 o'clock, FOMC member Charles Evans' second speech. So there are some data that might be interesting for all of the traders, but first let's take a look at the New Zealand dollar, and then we will take a look on the other Forex pairs. I'm thinking about the crude oil, and I'm thinking about the US dollar to the Swiss franc. We will see what is going on here because of the US data. So we start with the New Zealand dollar. As we remember, we've been going up towards 7,313, but the price reversed. Yesterday we got this testing of 38% of the Fibonacci retracement of this move up around 7,153. We have a new low. We touched 50% already yesterday, 7,113. Today the price had been rejected from this technical resistance at 7,147. It's already below 7,152, and it might be going lower towards the technical support at 7,097 pips, and then 61% at 7,073 pips. So it looks like this momentum here is slowly going below the level of 50, which is the neutral level. So any breakout below 50% of the Fibonacci retracement, and definitely any breakout below 61%, will result in the RSI dipping lower below 50%, below 50 points level, and into the negative territory, which means the bear would be in control of the market. They might push the prices lower towards the level of 7,000, and then there is 6,972, 6,941. This is the demand zone. This is demand zone, and only here I would expect some kind of a important reaction from the from the bullish side of the market. So when we look at this from a little bit zoom out, when we zoom out with this chart, what we can see somehow like a skewed head and shoulders pattern, but it's not like a textbook example, so we will not be looking at this this way. We got the channel here. We have a breakout from the channel, retracement now, and if we go back below this this level 6,941. Then of course the next one is way below, and those are the supports from the last year. Those are the supports from the September last year. So it's kind of interesting to see the market reaction in the coming days, because it looks like after this breakout out of this channel, we are right now still trading somewhere around the, there you go, somewhere above the above the trend line. But the market is very close. It looks like it's very close to either bounce from it or to break it. And because this is only a free wave down move and this looks more like impulsive, we might expect some sort of the rebound in the New Zealand dollar. So we are bullish as long as the price is trading first above the blue trend line, second above this green demand zone here. So that's the New Zealand dollar. Let's take a look at the US dollar to the Swiss franc. What we have here, we have the bounce. We have the bounce from the level of 9,078 pips. So we didn't hit the demand zone, the green rectangle. We have a bounce above the short-term trend line, but the market is still below the first key technical resistance, 9,163. So despite the bounce, from the oversold conditions as well, as you can see, only a sustained recovery above 9,203, 9,214 would bring us some sort of the conviction in this bounce here, because then the next target is 150 pips above, right, for the bulls. So for now, even if we are breaking out of this short-term trend line, it doesn't mean that much yet. So we should wait for the US dollar and Swiss franc to climb more before we should say that the impulsive trend, the impulsive wave, the uptrend is being resumed. Okay, so right now, please keep an eye on the levels I've just mentioned. Crude oil. Let's take a look at the crude oil. What is going on here? We need to zoom in. Definitely, we need to zoom in. We need to zoom in here. What is going on? Well, it doesn't look anymore as a wave B. It doesn't look anymore as a wave B because it's very extended in, especially in time. Maybe not in price, because we are of course still heading higher, but it's now extended in time. And as you can see, this impulsive wave down might be somehow misleading here. We already break 65.19. We are trying to go higher towards 66.53. It looks like the market would definitely test the high from 8th of the March, $67.97 per barrel, which is of course here, and that's the game-changing level. Of course, we can retrace as far as here, but it doesn't look any convincing anymore for the downside. Of course, it looks more and more bullish instead. So please pay attention to the next developments, because right now we are just approaching the very interesting zone here. Two technical resistances are already violated, and we are approaching the next one. Positive, strong RSI, 64 points, 65 points. There is still room to go higher, and I think the target is right now. Let me just put it in the horizontal line. We make it black and thick. And that would be $70 per barrel, a round number. Let's say, there you go, $70 per barrel. Here you go. So that's the target for the crude oil, and if we get there, that means the ABC correction is invalidated, and the whole correction has been done already during the wave A here. So that's everything for me for today. Thank you very much for watching, and I hope I see you guys tomorrow with a new fresh analysis. Take care and bye bye.